Aminata Soko is a director of ECDI's Women's Business Center of Central Ohio, WBC. She provides direct client services, including training and one-on-one counseling to small businesses. Joseph Armstrong serves as the Director of Lending at ECDI, managing partnership building, provision of direct services, and oversight of all sale lending staff. Thank you, Kevin, Aminata, and Joseph for joining us. And also, thank you, the audience, for being with us today. Now, I would like to pass it over to Aminata Soko and Joseph Armstrong to kick things off with understanding credits. Thank you.
Thank you, Jacob. So as an introduction to ECDI, again, it's the Economic Community Development Institute. We are headquartered in Columbus, Ohio, but our services span the entire state of Ohio and into Indiana and Northern Kentucky. If you want to go ahead and move to the next slide, Marisol. So our mission at ECDI is investing in people to create measurable and enduring social and economic change. We do that primarily through our small business lending programs, but also very much through our technical assistance and educational programs, which Aminata is plays a big role in that. Go ahead to the next slide. We support small businesses and entrepreneurs by providing, again, training, coaching, access to capital, which I'm very much a part of as the Director of Lending. ECDI is a community development financial institution, which is a United States Treasury designation. We are also the third largest SBA intermediary microlender in the country. SBA microlenders serve really business owners that are unable for various reasons to obtain finances through the typical banking channel. Then a little bit about the foundation of the organization. Ina Kinney is our founder and CEO. She is a former a refugee from the former Soviet Union. She established ECDI approximately 16 years ago in Columbus, Ohio. Since that time, we've expanded into the Cleveland, Cincinnati, Akron, Canton market, Toledo markets in Ohio. And more recently, we have expanded into Indiana and Northern Kentucky. And then Stephen Fireman is our president and general counsel, which Steve Fireman has been with ECDI almost as long as Ina has. Again, we have our headquarters in Columbus, Ohio, where we have our lending offices, the Columbus WBC. We have other business incubators that are more specific to food-based businesses and social enterprises. And then we have lending teams and also women's business centers in Cleveland and Cincinnati. And then we have loan offices in the Toledo and Akron, Toledo, Akron, and Canton. We can go to the next slide, Marisol. And then I'll hand it over to Aminata, who is going to discuss some topics related to credit.
Sure. Thank you, Joe. Good morning, everyone. So I'll kind of talk about the high level of what you need to know about our lending and credit policies. So the first thing is that ECDI, we use personal guarantee for all of our loans. And we also look at collateral and equity injection requirements. So basically collateral, if a client has any assets to back the loan, and equity injection, basically we want to see if the client has, or not want, it's actually a requirement for the client to have 12% of the loan ask. So just making sure that the client actually puts some skin in the game. That's some of the requirements that we look at. And then we might have some training requirements as well. So as someone is going through the lending process, or if they're approved, we might have them actually go through the training with the Women's Business Center to make sure that they have the foundation of business, foundational education in business to be able to succeed in their venture. And one thing that we report on is job creation. So one of our goals is to help create jobs in Ohio. So we want to make sure that we report on our clients' job creation, employment numbers as they're creating jobs in Ohio as well. And another thing to keep in mind, few organizations or people that we can't lend to, we're not able to lend to nonprofits, as we're a nonprofit ourselves, but also nonprofits not being owned by anyone, being owned by society. We're not able to lend to nonprofits because you can't really go after anyone if a nonprofit doesn't pay you back. So that's something important. And then individuals or businesses that have defaulted on federal loans, we're not able to lend to them either, because we are an SBA microlender. So we can't really lend to someone who defaulted on a federal loan. And the individuals who have committed some financial crimes as well, we're not able to lend to them. Next slide, please. And now looking at credit on a high level, and so the 5 C's of credit, this is what lenders, whether ECDI or banks, kind of look at when they're trying to offer a loan to a small business. So the first component of the first component of the 5 C's of credit is character, and that's usually determined by an individual's credit score or credit history. And at ECDI, not only do we look at the credit score, but we also look at the person's character and the person's experience in the business field that they're trying to go into. And the reason why we do that, being a character-based lender, it goes back to our foundation of being a CDFI, basically trying to help businesses and individuals who have credit struggles. So therefore, we look at the business plan, the financial projections, as well as the credit score in trying to make a decision on a loan. So that kind of encompasses a character component for us. And then the next thing is capacity. So basically, for this person, do they have the income and other financial obligations? Based on your income and other financial obligations, are you going to be able to pay back this loan? So think of that as kind of the debt to income ratio. And collateral is a big component that I mentioned earlier. So as we were kind of evaluating a loan, we want to see, do you have any assets to back that loan, so that we can, if the loan goes bad, we have something to fall back on. And then capital, do you have any savings, that you have put on the side to help pay back the loan if need be? And for us, that goes back to the equity injection requirement that I was mentioning earlier. Basically, we want to see at least 12% of the loan amount, the client having saved at least 12% of that loan amount. And the condition, how do you intend to use the money? That's really critical as you're approaching a lender, whether it's ECDI or any other lender. It's really important to come prepared with how are you going to be spending, what is that money going to go toward? But another component of condition too is really making sure that you've done some research in terms of the industry that you're going into. Whether you're a startup business, have you done some research in the industry? If you are already in business, are you up to date with the industry trends that you currently are operating in? That's very important too. That's something that we as lenders look at. Next slide, please. And then just the basis of credit scoring. Of course, we all know that your credit score is based on information in your credit report, and it basically predicts the likelihood of paying back obligations as agreed. Two significant things impact your credit score. The first thing is whether you pay your debt on time and as agreed. The second one is your credit utilization rate, which we can go more in depth later on. Next slide, please. And some more basics of credit scoring. So there are several, for each of us, we have several credit scores out there, and that is because there are several credit scoring models out there. So FICO is one of the more famous credit score models, and it's by Fair and Isaac Corporation. And most lenders pull your FICO score when trying to determine if they want to lend to you or not. And Vintage Score is another famous scoring model as well. And think of Vintage, where if you look at your Credit Karma, Credit Sesame, when you look at those scores, that's your Vintage Score. And the Vintage Score is created by the 3 national credit reporting agencies. And one of the recommendations as you're approaching a lender is to do your best to try to find your FICO score, because that's what the lender most likely is going to be looking at. So because those scores are going to be different, your FICO and your Vintage score are going to be different. And I'll explain why they're going to be different on the next slide. So kind of here looking at the FICO scoring model. So FICO looks at, in trying to determine your score, they look at your payment history, and that makes up 35% of the score. They look at the amounts that you owe, so that's 30%. And amounts you owe, it's basically looking at, let's say you have a $10,000 credit limit, and you've used $2,000 of that. So that means you have 20%, you've used 20% of what you're actually able to use on that credit And usually it's a good idea to keep that number low, that percentage low. And another thing that FICO looks at is the length of credit history. So that makes up 15% of your credit. Credit mix basically is how many different accounts you have in your credit report, and that's 10%. And new credit is 10% as well. So basically, if you've opened a recent account, that will account for 10%. And usually for FICO, it will take about 6 months for that new account to have an impact on your credit score. And so your vintage score, they do use these different components, but the percentages are different. So vintage might use 40% payment history to be able to come up with your credit score. But yeah, so I just wanted to explain kind of how the credit score modeling works. Next slide, please. And then I'll let Armstrong go through our different programs for the lending.
Thanks, Aminata. So many of the clients that we serve and provide technical assistance to related to repairing their credit, building their credit, maintaining credit, things of that nature, are very much interested in the various small business loan programs that we offer. Primarily and historically, we are an SBA microloan lender. So our microloan program is, I would say the most utilized, based on its flexibility. You can really use the loan proceeds for anything from inventory, equipment, working capital, things of that nature. We can lend actually up to $500,000 now. That's up from $350,000 as a response to the pandemic. In many cases, our borrowers have not been able to obtain financing through the normal banking channel, so they turn to us as a microloan intermediary. We are very much different in that we rely more so on the character of the borrower, the conditions, some of those other 5 C's besides just credit and collateral that Aminata had talked about earlier. So, on this particular slide, you'll see that we do have some minimum score requirements. There are, structured terms to the loans that we provide. However, in many cases, there are ways to work around a credit score. If it comes below the 590 cutoff, then we very well may have other programs that are more suitable for that type of situation. And we certainly work with our borrowers to give them opportunities to access capital, even if maybe they don't meet the criteria for a particular program. In all likelihood, there are other ways that we can help provide that access to capital. And Marisol, if you go to the next slide, this is information related to our Community Advantage program. The SBA Community Advantage program is somewhat new to us. We've offered this program for approximately 18 months or so about 1.5 years. It is very similar to what banks offer through the SBA 7A program, which if you've talked to a financial institution, whether that's a credit union or a traditional bank, in very many cases, if they're talking about SBA loans, they're talking about the 7A program. Where the Community Advantage program differs is that it's much more flexible in terms of credit requirements. When banks offer SBA loans, you have to get approved by the bank first, and then you get approved, essentially by the SBA. So the credit conditions are much more stringent, especially during this, in the current environment with the pandemic. A lot of financial institutions have tightened up, especially when it comes to financing startups and certain types of industries, which would include the restaurant industry, retail, things like that have really been impacted because of the pandemic. So we've seen a lot more interest in some of our loan programs, especially the Community Advantage program, because of that. We can lend up to $250,000 with this particular program, but that's with just that program. So if there is a need for more than that, then we can bring in our other loan programs to sort of meet the overall need. There are some other credit criteria related to the business itself, but in many cases, our clients, are eligible for this program. There are some instances where, you know, you're just not eligible as an individual or business, but typically that will go back to owing monies to the federal government in some capacity, whether that's a federally backed mortgage or a student loan, things of that nature. So, but in many cases, if there is a decline or something like that, we have other programs to help out. And again, that program can be used for working capital, equipment, inventory. It's very much flexible. We do some real estate transactions, however, and historically that wasn't a big niche for us, but we are able to handle those types of transactions as well if you're looking to purchase commercial real estate. So you can certainly get a lot of other information regarding our specific programs through ECDI.org. You can start the application process in that if you fill out our intake form, then that information gets populated to us internally. And from there, our relationship manager, which is the team that I lead here at ECDI, will reach out to you and provide information regarding your situation and have a conversation about that. Certainly everybody has a specific need and not all instances are similar. So we have a team of individuals that will help our clients through the loan process from start to finish. And everything is done in-house. Our credit underwriting, you know, our approvals, the compliance reviews, everything is done here at ECDI. You want to move to the next slide. So really the loan process again is facilitated by ECDI employees. We don't outsource anything in that regard. Our relationship managers will work with you to collect all the required documentation. They'll provide a checklist to help you through that. In many cases, there are a fair amount of documentation to provide documents, but our relationship managers will work with you one-on-one related to that. And if you have questions, they'll be your point of contact. So we have approximately 13 relationship managers now, and we're looking to grow that team as well. And if for some reason, if you aren't approved, they will certainly advise you as to why and what other opportunities there are to get access to capital, or if there needs to be a plan to get to that point, then we will help you directly with that. And that is in large partnership with our women's business centers. Next slide, please. And that leads me back to Aminata to discuss the services we provide through the women's business centers.
Sure. Thank you, Joe. So our Women's Business Centers of Ohio, we have 3 women's business centers currently, one in Columbus, Cleveland, and Cincinnati. And basically, the women's business centers are really the technical assistance arm for ECDI. So basically, that's where we provide one-on-one coaching to our small businesses. We offer small business training. So on a weekly basis, we have trainings, ranging from marketing to legal, really any topic that we believe our clients need to be able to succeed. We bring in the speakers to teach the classes. And our women's business centers are, our women's business center is the only SBA-funded WBC in Ohio currently. And like I said, we really provide that educational foundation to help our clients succeed. And that includes business planning, financial projections for those who are trying to go get a loan. We'll make sure that they are actually ready for that lending process. And then currently with COVID-19, we also have some programming. So we have something called the COVID Resource Network, where we're able to hire consultants on the behalf of businesses that were impacted by COVID. And I have the link below. So if you would like to learn more about the COVID Resource Network or sign up for it, you'll be able to gain more information on our website. Next slide. And then with the Women's Business Centers, we are membership based. So it's $80 a year to be a member of the Women's Business Center. And that includes one-on-one business coaching. We have access to a computer lab with Wi-Fi as well. We have networking events for our businesses. We also have something called a professional advisory network, where we have volunteers, CPAs and lawyers, HR experts, really experts in their field, who volunteer their time to work with our clients. We also have a co-working space, printing services, and legal assistance referrals as well. Next slide, please. And then I just have the contact information for the various Women's Business Center directors. So I cover the Central Ohio market. we have a Northern and a Greater Cincinnati director as well. So if you're in those areas, definitely feel free to reach out.
So a couple other things to wrap up, or as we wrap up with our presentation, we do offer our capital for construction program, which I think is pertinent in this situation. Through the capital for construction program, we provide financing to minority-owned subcontractors and also technical assistance and help with procurement opportunities. So if you're in a situation, and it's not just specifically construction, but if a business is in a situation where they need to bid on a project and need help with financing prior or being needing that type of financial support to be able to bid on a project, then we can facilitate a short-term loan, short-term financing to help earn an opportunity to bid on a specific project. And then just a little blurb about a PPP, which I think is important to note. We are currently facilitating this second round of PPP. So the caveat being that we are only able to facilitate PPP if it's a first draw request. So if you're coming to us and requesting a PPP for the very first time, then we can certainly facilitate that request. If you've already received PPP financing, then you would, in most cases, certainly want to go back to the institution that provided that loan in the first place. So, and Marisol, if you move to the next slide, we can facilitate amounts up to $250,000 through the PPP program. And obviously, those loans are forgivable if certain criteria is met. We will help our PPP clients with forgiveness when the time comes. So we actually have a portal that's on our website that you can find to get information related to PPP. You can also apply for an actual loan through that same website, ECDI.org. You'll find a lot of banners related to the PPP program that not only provide information, but again, you can go through that portal to apply for a loan. And currently the deadline is March 31st. So if you have questions about it, please reach out to us. Again, through the website is the best method to doing so. And you'll be partnered with one of our WBC team members who can answer specific questions related to eligibility, the processes, process to apply, things of that nature. And that is it for us.
Thank you very much. And I think now we're going to be moving it over to Mr. Keller.
Yep.
Again, Mr. Keller joins us with the Fedeli Group, and he'll be speaking about surety bonding. Thank you, Mr. Keller.
Good morning. First of all, thanks to everyone joining us today. I took a look at the participant list, and I see we've got a nice group. I see Jalita is from ODOT is on the group today. Hi, Jalita. I don't know anyone else, but hoping to get a chance to meet some of you. As Jacob said, my name is Kevin Keller. I'm a bonding agent. I've been in the bonding business for 36 years. My first 20 years was as a company underwriter. Then about 16 years ago, decided to go out on the agency side. Over the past 6 or 7 years, I have focused my new business on underserved markets such as minority businesses and disadvantaged contractors. They're very underserved, and very few professionals with the type of experience that I have are willing to spend the time and work with them, especially early on in their businesses, because it takes a while before you guys start get up and running and start generating income for yourselves and thus income for others. Anyway, the technology being what it is today, it's become much easier to work with customers outside of your own geographic area. So we've been able to expand into the Midwest, into Michigan, and in the Chicagoland area, and Pennsylvania as well. We can start with the next slide, Marisol. If you've had any kind of, I understand that most of you have had some background or some dealings with bonding. And I do a presentation called Surety Bonds 101. And from that, you would learn, and hopefully you've at this point learned why bonding is important. There's a couple of reasons for that. You also hopefully will know the difference between surety bonding and insurance. There's some very key differences there that are important to know. Hopefully you know the type of surety bonds that you will be confronted with in the business that you're in. And the next item I think is very, very important, and I'm going to expand on that a little bit in the upcoming slides, and that is, what other professionals do you need to have on your team other than a good surety bond agent? You will hopefully have had some experience or exposure to the surety underwriting process, because there is a process involved. A lot of contractors initially think that surety bonding is an event. It happens right now, but it really is a process, much like the credit underwriting process. It starts and sometimes it gets interrupted and you have to go back to the beginning, but there is a process involved. Hopefully you've been exposed a little bit to the options that are available to you in the surety market. And finally, things don't always work out the way they're supposed to. Sometimes there are claims that are presented against your bonds. Hopefully you've had some exposure to that as well. But that's Surety Bonds 101, and I've been asked to do a little bit, maybe go to the next level. So today we're going to do Surety Bonds 201. It's going to be a next slide, Marisol. It's going to be a kind of a flyover, because in a half an hour it's very hard to get into detail, but please feel free to call me or reach out to me at any time if you want to talk more in detail about any of these things or all of them. I'm happy to spend the time with you. So, as I said before, I think that having other professionals is very, very important. If you're a contractor, you're going to do business with about 4 or 5 different professionals that are going to be very important to you. And you want to make sure that you are working with professionals who specialize in the construction industry. You're going to have a CPA. You're going to have an attorney. You're going to have a bonding agent, perhaps, an insurance agent, and a banker. Those 5 professionals are extremely important. You want to make sure they specialize in construction, and you want to introduce them to each other so that they know each other. They think of each other whenever they are making recommendations to you in their specific discipline, knowing that advice they may give you may have an impact on those other professionals and their other professionals' ability to do a good job for you. So you want those professionals as part of your team and kind of to know each other as much as possible. We're going to go back. You're going to hear this over and over again as Joseph and Aminata mentioned. Credit and your credit score is extremely important. That is no different in bonding. It actually starts with credit. If your credit is bad, it's hard to even get to the next step. It's almost impossible, frankly. So the first thing that we would do when we're evaluating a customer for bonding is to do the credit reports and try to take care of any issues that might exist right there. So one thing you definitely want to do is you want to try to maintain good bill paying habits and keep your credit score strong. Next thing I think is important in the big picture is constantly improving the accuracy and the timeliness of your accounting system. If you're a brand new contractor, you're probably, like most contractors, you're going to buy a accounting software program. QuickBooks is a great program. I'm not here to sell QuickBooks, but it seems to be the accounting program that many small businesses use. So you're going to want to use something similar to that to get started. You're going to want to set it up. You're going to need help setting it up. So you're going to have to have an accountant that understands construction. and you want to constantly improve the accuracy of that system and your ability to provide financial information to your creditors on a very frequent and timely basis. My recommendation is that contractors be able to provide a balance sheet, a profit and loss statement, an aging of accounts receivable, and a work in progress schedule, at least on a quarterly basis, and working towards the goal of being able to do it on a monthly basis. So that's extremely important in the big picture. And then you'll want to learn how to manage your balance sheet so that you can maximize your surety capacity. That's something you're going to do along with your CPA and your bonding agent. So those four things are in the big picture, I think, the most important things that you can do in order to be able to have a strong and adequate bonding capacity. Next slide, Marcel. The next item I would talk about is how do you understand your existing bonding capacity and how do you increase it? I think it's very important to know what your current bonding limits are, and not only what your maximum limits would be, but what your everyday limits are, and what we call what your stretch limits are. You want to know, and this is, you work this out with your bonding agent, you want to know, if I call for a bond today, at what limit can I get a bond where it's very easy to get, where we're already pre-approved for that amount? The agent likely has the authority to issue that bond without getting special approval from anyone else. You want to know what that limit is, because if you stay within those limits, you can get a bond very quickly. But you also would like to know, what if I came to my agent with a bond request that was quite a bit larger than what my everyday limits are? About how far would that bonding company go with me right now as I sit today, and as my financials and my credit sits today? Just how big would they go? Because bonding companies like to use, they like to grant authority to their agents that will handle 90% of daily needs, but they'll reserve extra capacity for you for that special situation where that special job comes along. So you want to know your everyday limits. You want to know what your stretch limits might be. You also want to know perhaps what the company underwriter, because I'm an agent, I have to go to the bonding company to get approval for bonds that are above the authority that they grant me. But then my underwriter also is accountable to his or her home office. What can my underwriter do for me before they have to go to home office and get an entirely new person who doesn't know me involved in making decisions on my account? So as much of that you can, I'd say, kind of bird dog from the very beginning, is going to help you know what's going to be done for you, what could be done for you, and it'll give you the ability to know in advance if something big is coming up, to give your bonding agent plenty of time to try to get it worked out. Now, the next item would be you're working with your agent and your underwriter to understand, what things can I do to increase my bonding capacity? If you can't do $1 million job for me today, what do I need to do as a contractor to get to the place where you can do that $1 million job for me? So it'll give you goals and milestones to hit, so you know how you can increase not only your single job capacity for bonding, but also the total capacity that you might have. So that's very important, is to know, how can I get more? How can I, as my company grows, how can I make sure that my bonding line is growing along with it? Next is, and this is so important, before you make any significant financial or operational decision that will have an impact on either your operation or your financials, discuss it with your agent. And you're going to discuss these kind of things with your agent, your accountant, your banker, and others. But you want to make sure, before you pull the trigger on a major decision, that you know the reaction that you're going to get from your banker, from your bonding company, or any other creditors you may have. You may still go forward with that decision, but at least you'll know the impact of what that decision is going to have on your business, and you're dealing with bonding and other credit sources before you make the decision. Next slide, please. Now, these are just, again, these are big picture things that are very important. These are the kind of subtle things that become very important in your dealing with really everyone, but especially your bonding company. Be personally accountable. If you have a problem, you lose money, it's easy to blame it on an estimator. It's easy to blame it on your bookkeeper, but you need to be personally accountable because you are in charge. You are the owner of the business. You are the one who is accountable at the end of the day for your business. And it's very difficult to constantly say, well, this person screwed up, this person screwed up. At the end of the day, you hired that person and you're supervising that person. So you have to be personally accountable. And if you do that, and if you exhibit that kind of behavior within your organization, the people that work for you will also become personally accountable as well, and more accountable to you. Be open to constant learning of new things and improvement to your business. You will get a lot of direction from your professional team, your accountant, your banker, your attorney, insurance, and so forth. Listen to what they say and try to do the kind of things that they're asking you to do. They're not asking you to do these things just so it makes their job easier. They're asking you to do these things because it will make you a stronger business person and will help your business thrive and prosper. One last thing here on the big picture is maintain that relationship with your surety agent yourself. You are the owner of the business. Do not delegate the surety relationship to someone else in your organization. You want to make sure that you give the surety and your surety agent, you want them to know that it is taking your personal attention, and that that relationship is an important thing. And you want to be able to really develop that relationship over time. Now, that doesn't mean that you can't delegate when you're going to bid a job. Somebody else would maybe submit the bond request to the agent, but you want to make sure you stay engaged with your surety agent and you're having these types of conversations along the way about how you can get better, how you can improve. Next slide, please. So those are essentially the kind of day-to-day things, the big picture things that I think that all contractors should be thinking about. Let's talk about some of the things that you can do on a day-to-day basis that will make your life, your bonding agent's life, and your underwriter's life easier so that they can do the things for you that you need to be done. Number one, when you do need a bond, give your agent time. Give them enough time to be able to get the bond prepared and get the bond in your hands. Things are becoming easier, especially during the pandemic. A lot of public owners have been willing to accept bid bonds that were executed and scanned and emailed, where in the past they expected to have a bond that had a, an impression seal and a wet signature on it. Technology is changing to a point now where I suspect in the next 5 years, it'll be so easy to send somebody a bond that you never have to worry about whether the Postal Service is going to get it there on time. And again, with the pandemic, I think everyone's having the same problem with the U.S. Postal Service. They've just not been able to keep up with their service as they would like. And sometimes I've seen it take 5 or 6 days to mail something, 2 counties away here in Ohio. So time can be a real issue, and you don't want to leave yourself not enough time. You'll be asked for information along the way, whether it be financial information or specific information related to a job. You want to provide complete information and good quality information. Your estimators are, many times when you're requesting a bond, your estimator is probably the best person in your organization to communicate with your bonding agent and request the bond, because the estimator is looking at the bid documents. They will know a lot of things about the job that maybe a clerical person might not know. I know a lot of companies like to have more of a secretarial type person requesting bonds, and a lot of times they just don't have the background and knowledge to know, about the job to be able to do that. So make sure the person that is dealing day to day with your bonding agent is someone that is privy to the information that's needed in order to communicate to the agent, job information and so forth. As an owner, I think you want to do this all the time, but especially with your professionals, be responsive, return phone calls and emails. Don't, when I call, or when your banker calls, or when your CPA calls, don't wait 3 or 4 days to call them back. Be very responsive to these folks, because they are in a great position to help you. And I'm responsive to everyone that I do business with, and everyone who reaches out to me. It's just my own personal way. And I think that's very important. And I trust me, when I'm selling, when I've got to twist an underwriter's arm to get them to do something for one of my customers, that responsiveness and all the other things that I've talked about come into play as to how hard I'll fight for them to get that done for them. So those kind of things become important. Next item, do what you say you will do. If you say you're going to provide something by a certain date, do it. And if you're unable to do it, let us know. Hey, I'm not going to be able to, I said I would do this. I'm not going to be able to do it, and here's why. People are very understanding and flexible, especially the people that I work with. If they know that someone's not able to comply, but they promised something, but they reached out and said, hey, here's why I can't do it, that makes all the difference in the world. So do what you say you're going to do, and if you can't, kind of get ahead of it, and I think that'll be helpful. Next item here. If you're in the construction business, you will not spend a whole career in the construction business without having to deal with a dispute, whether it be with a general contractor, with a supplier, with a subcontractor, with a architect, or a some time of other public entity manager. You're going to have disputes. They are part of the construction process. My advice to my customers is simply this: don't be a doormat. Don't let people walk on you, but don't fight over everything. There are things that you do need to stand your ground on. And if you do have to stand your ground, make sure you're very well documented. Make sure you understand your contract, and you've read your contract, and you understand that there will be provisions in your contract for timeframes from which you have to provide notice. Make sure you don't, if you've got to give notice to the owner within 7 days of some event, that you give notice within 7 days, because if you don't, your problem may become your problem, and you may not be able to resolve your problem because you were too late in notifying the owner or whoever it may be. So, like I said, don't let people walk on you. You've got to be firm in the construction business, but don't fight over everything, and make sure you're well documented, because I guarantee you, if you've got a problem, or you've got a dispute, or you're fighting with an owner or a general contractor, when you walk in with the documentation, all of a sudden the road becomes a lot easier for you to get what you need. So keep that in mind. That's very important. The last thing here on this page is, don't hide a problem from me. I mean, sometimes you got to kind of hide problems and not disclose certain things to a certain time. But keep in mind, I'm your friend. I'm not the bonding company. I would be your bonding agent, or whoever is your bonding agent. They are your friend. They are here to help you. Don't hide things from them. Try to be open and transparent with your bonding agent. And if there's an issue that's brewing, or something that may be coming up, talk to your agent about it. I can be very helpful, if I'm your agent, in helping you navigate that situation, so that you would have a chance of having a more favorable outcome. So, you don't want to spring something on your bonding agent at the very last second, because it may cause a problem for me being able to help you and get for you what you need. All right, next slide. I guess that's it. How long did I take? It was only 15 minutes. That went through pretty quick. We have plenty of time for questions. So you'll see my bio, and the next slide is my contact information. If I can be of any help at all to you, please reach out to me. I specialize in working with contractors like you, and I think I can help you out. So good luck in your endeavors, and I'll stay here to answer any questions that anyone might have.
Awesome. Thank you so much, Kevin, Aminata, and Joseph. I'll be leading just a quick Q&A session here with you guys. There were a few questions that came in through the chat box. So I'll start with Aminata and Joe. Can ECDI secure a revolving line of credit for a customer?
So currently, we do not offer a line of credit product or credit facility. We are only offering term loans. We can certainly provide working capital through a term loan, but it wouldn't be as a line of credit. The one difference would be our capital for construction program. And that's not a true line of credit, but it is more of a short-term credit facility. So that's a little bit different in its nature. That's not to say that we won't in the future open ourselves up to a line of credit. We have done that in the past, but it's really the nature of our clients didn't really utilize a line of credit in the way that it's intended. So in many cases, we had clients with lines of credit, they would max it out and not revolve it, which is really not the purpose of it. The purpose is short-term cash flow. You use it, you pay it down, use it again, and there's a revolving method to utilizing that credit facility. So we sort of moved away with that. I mean, obviously, in my banking days, I'm very well familiar with the benefits of doing that. So, I'd like to see us be able to do something like that, but for right now, we don't have that particular product.
Great, thank you, Joe. Kevin, this one's for you. What type of major decisions would you want input from a bonding agent and banker, such as purchase of large equipment or anything else specific?
Well, certainly purchase of large equipment would be one of those things. I try not to be too specific, but a purchase of a large equipment will have a major financial impact depending on how you buy it. For instance, the bonding companies look very closely at working capital when they provide bonding capacity. So if a contractor, let's say you're going to buy a $100,000 piece of equipment, you have different ways to do that. You could either pay cash for it, which would take $100,000 of your working capital away immediately, or perhaps you could finance it, which would only impact your working capital by the amount of principal that would have to be paid over the next 12 months for that. So before making that purchase, you have the conversation with your bonding agent as to, hey, well, how's it going to affect my bonding? I'd love to pay cash for this equipment. I prefer not to take the loan, but what's it going to do to my bonding capacity? And that's the conversation you want to have. Some other examples might be, here's a great example. I once had a contractor that was a general contractor. They did a lot of work. They built buildings. They did renovations for buildings, but they had an opportunity to acquire a gentleman who worked for the transit authority locally, and he was an engineer and an expert at building bridges. So they decided they were going to hire this gentleman, and they were going to start doing bridge replacements and things like that. Well, this was completely different than the type of work that they had done in the past. And if they were to just send me a request one day for a bridge replacement, my eyes would have popped out, and I would have been really difficult to do. Instead, at the time I was a company underwriter, but they called their agent, and their agent called me, and we went out, we met with them. We met with the person that they had hired. We got a real understanding of the background and experience of the person that they were going to hire, who was going to manage their bridge division. And it was just not a problem. We got a real comfort level. So springing that on them at the last minute would have been a problem, but providing that notice and a chance to discuss it and talk about it ahead of time made the process go very smooth. So anytime you're going to do something that's radically different than what you're already doing, or make a decision that's going to impact your financials dramatically, the more time that you give your professional service providers to have that discussion, the smoother that process will be.
Great. Thank you, Kevin. This one's for Aminata or Joseph. Could you guys provide a success story that ECDI has helped a small business with?
Sure. Yeah, there's a lot of them, but one that kind of jumps to mind. Her business is called Dos Hermanos. So the business owner is Lisa Gutierrez, and she started with us from the very beginning when she started her business in 2012, and she has a taco food truck. So she had only one food truck when she came to us, or we actually found her on the side of the road. ECDI found her, and we basically helped her with the initial business planning, financial projections, offered a loan. And when we also have something called the Food Fort, where we help incubate food-based businesses. So she started in our kitchen, actually back here, cooking her food and going out and selling it. And currently, she has 25 employees. She was able to start selling tacos in Chase Bank. So they have something called the McCoy Center. So she's selling there. She's able to sell at the football games. Back when we had football games, hopefully we'll come back soon in Ohio State University. Yeah, so she's done pretty well. And right now we created another Food Fort 2.0. She's actually the main tenant in that Food Fort 2.0. So yeah, she's one of our great clients.
Awesome. Thank you, Aminata. If any of you guys in the audience have any questions, please input them in the chat function. I have one question for you, Kevin. Once people connect with you, they want to connect to chat about bonding. Do you have your own network relationships for individuals, such as connecting them on the legal side of things, accounting, etc.?
I do, yes. I would say my stable of referral sources in the Chicago area isn't as strong as it is in Cleveland, but I do have, I have a number of customers in the Chicagoland area, and I'm able to observe the work of their accountants and other professionals. And so I've found some that I like, and I can refer. Perhaps the best construction law person I've ever met is in Chicago. So yes, we have other professionals that we can help refer you to. And I have underwriters that are housed in Chicago. If I need a specific referral to make, I will talk, and I would definitely work with Jacob, you, Marisol, and the people in your office. We have referred people out. You have some great contacts as well.
That's correct. Yep. Thanks, Kevin. And another question for you, Kevin. If somebody wants to, well, how early is it, or how soon can you have the conversation if somebody wants to begin talking about increasing their bonding capacity? Is that a conversation you have when they first seek bonding, or is it something that could be discussed later on, and how soon can the conversation begin?
I would say as soon as you have the thought in your mind that you'd like to increase your bonding capacity, that's the time you want to start the conversation. Because it is a process. It could be a matter of making a change to a different bonding company who's maybe more flexible, more liberal, or it may be something on your end that you would need to do that may take a little bit of time to do in order to have that bonding increase. So you don't want to, obviously you don't want to do it the day before you need that increase. You want to lay the groundwork for that and start the conversation as early as possible. That's a great question.
Awesome. Question for Aminata or Joseph. Sometimes loans take a while from start to finish. What would you say is a typical start to finish time frame for a loan from your end?
That is always the question, that's for sure. It certainly depends upon the nature of their request and the complexity of their request. If someone's coming to us and they want to purchase real estate, it's something that we can do, but we haven't done, historically, and there's a little bit of a learning curve to that, then it's going to take, it might take 90 days or so. If we're leveraging the Community Advantage program, because it is a larger dollar amount request, we are taking that request, we're approving it, and then we're taking it to the SBA for their approval. Because of PPP and everything that's going on, that creates delays as well. So, I would say if it's $100,000 and over, and you're kind of coming to ECDI, it's probably going to take a good 60, 90 days. A lot of that is also determined by, and Kevin talked a little bit about this, is just sort of being able to provide the right type of documentation in a timely manner and make sure that it's accurate and things of that nature. If you're coming to us as a startup company and you don't have a business plan, well, that's going to take some time to put that together. If you think of that as part of the loan process, then it could be 120 days. So it certainly depends upon the current situation, the nature of the business, things like that. So, personally, I try to set those expectations early on. But once I kind of get a sense of where the business owner is, where the business is, then we can certainly kind of drill down to, how long is this going to take? And a lot of that can be determined, like, what time frame do you have? If you say, I want to do this in 30 days, then I'm going to tell you it's probably not going to happen. So, I'm certainly upfront about that, because I don't want to waste, a business owner's time. That time is valuable. So I'm very upfront about that, as well as our relationship managers.
Got it. Fair enough. Joe, you also mentioned something in regards to if somebody has a credit score that's less than 590, what are these other program examples that you offer?
Yeah, currently, and I would say that's usually a situation where, we might be able to provide some financing on a smaller scale. But currently we have a particular loan program. It's called our Enhancement loan program. It really is to help business owners kind of get through the pandemic. So you can borrow up to $20,000. If your score is less than 590, then you might be eligible for 5,000 or 10,000. So they are smaller dollar amounts because of the inherent risk that sort of we're taking on. And that's, those are things that we want to help with. This type of loan can certainly help with that. But, if it doesn't, and it's not enough, then, our microloan program, we say it's 590, but if it's less than that, we have some flexibility there. So.
Thank you.
Credit is always about, it is sort of case by case too. I mean, it's never sort of like, just a one size fits all type of situation.
That's true. Awesome. Thank you, Joseph. And then one more question for you, Kevin. I know you mentioned in one of your slides about being too late to hide a problem or want to manage that unfavorable outcome. I don't know if you could give an example or if you're open to give an example of something that was too late of a problem that somebody had.
Well, it's not as much that it would be too late to solve the problem. What happens is so many times bad information travels slow, good information travels fast. So if someone has, let's say you have a really bad year and you wait until the very last second till you finally have to give a financial statement to the agent who's got to then give it to the bonding company. And the bonding company's been kind of sticking their neck out for you the last 3 months while you're sitting on that bad information, knowing that as soon as you gave that information to the surety, it might be a problem. It erodes your credibility as a contractor and as a person. And by hiding negative information or not being willing to share it until the very last minute, you erode that trust that your bonding company or your bonding agent has in you. And that trust and confidence that they have in you is as critical to the relationship as the financial information you provide is. One of the things that the credit presentation, they talk about the 5 C's. Well, we're not as smart as the banks, so we only have 3 C's. But they're 3 of the same C's that they have: character, capacity, and capital. So the capital is very important. The ability to do things is extremely important, but the number one thing is character. And I will do business with someone who has character, but who's short on capital and maybe doesn't know exactly how to do something. But if they got character and I know they're going to step up and they're going to do everything right to their very best of their ability, that's the type of individual that I want to back. And so hiding things or not presenting information until you absolutely have to, and not being transparent creates an erosion of trust and confidence. And that's the biggest thing. And yes, if you have, let's say that we've written a bond for you and one of your suppliers hasn't been paid and they make a claim against your bond. If your claim is coming, you know that there's that just a matter of the supplier making it.
Looks like I'm having some connection issues with you, Kevin. I don't know if anybody else is experiencing the same thing.
Yeah,
All right.
it's not me.
Uh-oh. Well, this is I guess the Zoom reality. Kevin, we lost you. I don't know if you could still hear us, but I think this is a good place to kind of conclude the presentation. I do want to thank the panelists that were here with us this morning. We're right in time for lunch. Kevin Keller, Aminata Soko, and Joseph Armstrong, thank you so much for being here and providing your time, your wealth of knowledge. SBTRC here at the Great Lakes region really appreciates it. I also want to thank everybody that was able to join us today. And then if you'd like to connect, please do. Here, I'm going to share a slide of the contact information for all the panelists, as well as the SBTRC Small Business Transportation Resource Center. That will be all for today. Thank you so much, everybody, for joining us this Thursday, and have a great day.
Hello,
Thank you.
Kevin.
Hey, sorry, I don't know what
No
happened.
problem. Don't
Oh,
worry.
I made it.
We just ended, Kevin. Thank you so
No
much.
worries.
Okay,
Thank
Thank
you
you.
again, sir. Thank you.
Thank you for
Thank you,
having
everyone.
us.
bye-bye.
Bye.
Bye.
Thank you, everybody. Have a great day.
All right, are we in the panelists? All right, Maisel. Well, very good. What you think?
Thank you so much, everybody, and we'll talk to you soon. I'll connect with you afterward, Jacob.
Oh, I thought we were in the panelist room.